We're off to a pretty good start in the first quarter. We had a nice finish to 2015, and that's really continued through the first quarter of 2016. Premium growth is looking really good. We're up well over 7% in the first quarter, which is the best we've done in many years, so we got a lot of momentum. So overall, very good premium growth. We had a decent combined ratio. Usually the first quarter is difficult for us to measure because of the effects of the winter. It was a quiet winter, but still you have winter storm losses. So the combined ratio is just slightly over 100, just a little bit over our seasonal plan, but we expect that will continue to improve as the year goes on. Our investment portfolio did generate an above plan figure for the first quarter, so that's good, and we were able to add over $7 million to our surplus, which stands just under about $1.1 billion now. Pretty good start for us in 2016. As we break down our four product areas, commercial lines continues to see very strong growth. Personal lines, we have one particular runoff. When you pull that out, it's up well over 4%, and we expect that particular product line to be run off by June of this year. So we think personal lines is going to have very nice premium growth this year. Bond operation is also seeing some growth. Our fastest growing operation is a reinsurance assumed operation. Rob Hetzel has seen a lot of nice opportunities and has taken advantage of those. Of all of our regional offices, our star for the first quarter so far is the New England operation, which is up over 10%. Great growth in both commercial lines and personal lines, both growing about at the same pace. So a really good start for those guys. Florida is also off to a great start, over 8%. The Northeast region is up over 3%, really led by commercial, but seeing many improving trends in personal lines, particularly in Pennsylvania and Maryland. Our West region has a runoff state, and so that's kind of dragging the personal lines. So if you pull that out, they are seeing a slight growth in personal lines, but there's many states out there in the Western region that are doing very well in personal lines, like Arizona and Wisconsin, for example. Commercial lines is doing well, so we think the West will be able to see some pretty good growth this year. In our Southeast region, through the first quarter, it's sort of flattish, but I will tell you in April, that's really kind of taken off, so we think we're going to see some pretty good growth there as well. So overall, a very good picture. All the regions look like they're poised to see some positive growth this year. We're very excited about our new personal auto product, which we launched in 2 states last year to great success. We've already put it into 2 states this year, and we're seeing a dramatic rise in new business. We successfully launched our new Main Street Protection Auto program in Connecticut in February, and just recently in New Hampshire. And we're seeing great results in Connecticut. New business is up 136% through March. And we also continue to see excellent results in our first 2 launch states from last year, which was Virginia. Personal auto new business is up 119% year to date, and South Carolina is up 61%. And we're very excited about the additional states that will be implementing the Main Street Auto product this year, which will be Maine, New York, Pennsylvania, and Rhode Island.